Is this a fluke, or is it enough to comfort the hawks on the Bank of England who are worried about inflation longer term?
I don't think it's a fluke, but I also think that the hawks on the Bank of England will still be there fretting about some of the structural stories in the background. So I think, in the middle is Governor Bailey. He's the key voter that's going to decide what they'll do in December. It's certainly enough for him because I think the weakness is fairly broad versus the expectations. But if you're the hawks, if you're Hugh Pill, you're Claire Lombardelli, you're Catherine Mann, you're still going to be sitting there thinking, OK, services inflation's quite high. It's still 3.2. And I'm also worried about maybe what's going on there in the labour market and whether the labour market softness is really going to deliver the softer pay growth that will keep inflation low into next year and beyond. OK,
well, we've had traders updating their bets, so they've added to them for next year. They now see 69 basis points of cuts by the end of 2026. I think before this, they'd seen about 58 basis points. Does it at all change your outlook for next year?
I think it does when you see this level of subdued price setting in quite a few sectors. I think, there's a couple of things going on here this time. One is possibly that Black Friday timing's a factor, and that might be overstating the degree to which we've seen this softening, and you might see some of that come back in December. Airfares is another factor, always a wild card for UK inflation. That could come back. But what we're starting to see actually over the last 3 months is a picture where in some of those really discretionary areas of price setting where demand has been subdued, the prices are being set in a more subdued way. And I think if that carries on into next year, you can win the hearts and the minds of the hawks, but it's going to take a bit more time when they've still got those structural worries at the back of their mind.
Mm-hmm. And those who are worried and hawkish and structurally concerned around inflation, then Victoria, might be looking at the services number and saying, well, that is such a big part of the UK economy. And yes, it came in lower than expected at 4.4%, but it's still 4.4%. It's still pretty high. And it's not much lower than the estimate of 4.5%. So how will that services number influence the thinking, do you think, at the BOE?
Yeah, it's an interesting one. I mean, something that happened at the Monetary Policy Report last time was that they took out the monthly services number, which to me felt like a little bit of a sort of hint that we shouldn't obsess or focus on it quite so much. But the absolute level and the 3-month picture, which they do still give us their view for, is important. And you're absolutely right. It's still elevated. And the hawks have been worrying that pay growth at large, beyond the private sector number, is still elevated. Public sector pay growth is very hot. That's more cash into pockets. I don't think that there's enough there to shift the structural story. And the services inflation number is exactly a symptom of the fact that you have had strong labour cost growth continuing to drive some of those labour cost heavy service sector firms.